Apple stock ticker AAPL just released their latest quarter's earnings report, and the market seems to like what they are seeing. They're up almost 7% in after hours. Let's go ahead and dig into it. Now, we need to keep in mind, over the past month, the company's up around 2.34%, but if we look at them year to date, they're actually down around 10%, so they have been underperforming the market year to date. So if we jump into this earnings report, we can see in Q2, GAAP earnings per share of $1.53, which was a beat by around 3 cents, and revenue came in at $90.8 billion, which was a beat by $190 million, even though revenue was down around 4.3% year over year. Now, in other news, we see that the company just authorized a dividend hike of 4.2%, but in even bigger news, they also authorized a stock buyback of up to $110 billion. Now, that is a lot of stock buyback. And to illustrate this, let's jump over to my stock screen real quick. Like always, you can download any of my spreadsheets over on tickerdata.com and also get access to the Ticker Data add-on that allows you to automatically import stock financials straight into your spreadsheet. So if we come up here and click on AAPL and hit enter. If we come down here and look at shares outstanding, we can see buying back shares has been a major focus for this company for quite some time now. It looks like in 2013, shares outstanding was close to around 26 billion, coming in at about 25.9. And as of 2023, it was all the way down to 15.7 billion. So you already know this made a major difference in their earnings per share growth, in their revenue per share growth, and in their free cash flow per share growth over the past decade. Now, what's interesting is if we look at things from a dividend perspective for this company, if we come up here and plug in AAPL and hit enter, we can see the company has a low starting dividend yield sitting at 0.55%. Now, if we look at the yearly dividends, it looks like the dividends have actually been reduced, but that's actually not the case. This is because the company has had stock splits, and this is something we can now account for with ticker data. If we come up here and change this to adjusted dividend and hit enter, we can see this data will now account for the stock split. So in 2013, they're paying out around 11 cents per share. 2023, it bumps up to around 24 cents per share. So really, for a company that's been as successful as Apple, the dividend payments haven't increased by a whole lot. Now, the cash flow and payout ratios are only sitting at about 15%. So why aren't they increasing their dividend payouts at a high rate? Well, we can continue to see, based off the historical data and the recent news from the earnings report, buying back shares is the main focus for this business. Now, it might make even more sense to be buying back shares at their current prices. Now, why is this? Well, if we look at Apple stock, we can see 52-week range high was sitting pretty close to around $200 per share. And before the recent earnings report, they were actually trading pretty close to their 52-week low. So yes, buying back shares can be very helpful for a company, but it's even more helpful when they're buying them back at a lower stock price. So potentially, the management team at Apple believes their intrinsic value is far higher than their current trading price, again leading them to believe that buying back shares is a great use of their capital. Now, if we dig into the actual earnings report just a little bit more, we can see some of the segments. They saw weakness in the company's iPad and wearable business as both groups declined year over year by 17% and 9.6% to $5.56 billion and $7.91 billion respectively. So that was below analyst expectations. Now, if we look on the bright side of things, we can see Apple's Mac business generated $7.45 billion in revenue, which is up around 4% year over year. And then Apple's service businesses. This is where it really looked good. It rose 14% from year ago period and accounted for $23.87 billion in revenue during the period. Now, one of the big problems for Apple right now is problems in China. We can see revenue from Greater China fell 8.1% year over year during the period to come in at $16.37 billion. But we do have to keep in mind that is above what analysts had been expecting. Now, a big reason for this is Apple iPhone sales in China have tumbled quite a bit, down around 24%, and this is partly due to competition from their Chinese rival. So while some headwinds were expected from Apple, as we've seen, the company did do a good job of outperforming in their most recent earnings report. Investors seem to be pretty excited with the dividend hike and the authorization of a massive stock buyback plan, which has proven to be pretty effective for the company over the past decade. So go ahead and let me know in the comments down below what you think of Apple stock and what you think of its most recent earnings report. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.